Okay, everyone, thanks for joining. Excited? NFP? Pretty important NFP today. But yeah, just doing a quick audio check and then we can get started. My name is Vida and Jodo, and we can talk about the NFP today. Okay, audio seems to be good on my side. Thanks for joining in, everyone. Super excited. Obviously, it's NFP every month. It's always exciting with NFP. So we're going to talk a little bit about NFP. So for you guys that are new, I'll briefly touch base on what NFP is and why it matters. But I think I really want to discuss about the context of tonight's NFP number in terms of how important it is. All right, so let's get started very quickly. We're going to go through maybe 10 minutes of just a basic understanding of what NFP is, and then we'll spend about 20 minutes, 15-20 minutes to talk about the range, and then we're going to start. The NFP is going to get released in 29 minutes. All right. Okay, just a quick disclaimer. Any opinion, news or research, prices, analysis, or other information discussed in this webinar or link to this presentation is provided as a general market commentary. Do not constitute investment advice. So do this at your own risk. And just to be clear, NFP, it's one of those risky events in the market, right? The next one that we're going to do is going to be the CPI numbers. That's going to be on the 13th of June. All right, so a couple of bonuses. Obviously, we've got the deposit bonus. That's going to be a promo code at the end of the session. That's going to be a double the deposit bonus. And then if you register through email, and I believe if you only register through email, you're going to get access to the Telegram channel. But that's pretty much it. All right, just a little about me. You can screenshot it. If you can pause there, you can read it if you want to. But I've gone through more than 250 NFP. So yeah, 21 years of trading. So it's a pretty normal, chill thing for the NFP. All right, so content for tonight. Obviously, we're going to talk about the NFP numbers. Who collects the data? What are the NFP numbers? What we're going to be looking at? And then there's going to be other data released together with the NFP numbers. There's going to be unemployment rates as well as the average hourly earnings. So we are going to talk about that. Couple trading rules on how you can actually trade the NFP numbers. There's going to be 4. We are going to focus on 2 tonight. But yeah, we'll talk about it. And obviously, we're going to be doing that live trading session as well. All right. So who collects the data? It's going to be the Bureau of Labor Statistics, obviously. Collects a lot of data, not just the NFP numbers, not just the employment numbers. They collected the CPI numbers, which is the inflation number, PPI, also an inflation number, and PCE as well. So a lot of those data come from the Bureau of Labor Statistics. So you can go to their website actually and basically look at their calendars. They basically publish the scheduled release every year at the beginning of the year, so you can actually find out key dates for the month. But if we talk about the employment numbers, it's usually the first Friday of every month. So obviously today's the 2nd of June. As the first Friday of June, that's when we're going to be doing that. I think there's a few exceptions. So I believe normally in February it's going to be a little bit late, about a week late in February, just because they don't have enough data to compile, right? Okay. So NFP, what is the NFP number? So the NFP report is basically a monthly release by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. So market analysts and investors usually look for NFP figures above 200,000 as it is seen as a more positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context in which it is released. So I want to spend a little bit more time talking about the current condition. You can probably see the US dollar weakening, and you guys are probably wondering what's really going on. So there's actually a lot of stuff going on with the US dollar getting a little bit weaker in the past few days. Is that any indication that today's NFP is going to be weak for the US dollar. Is it going to be strong for the US dollar? We need to kind of figure out the context of that information as well. All right. So typically, obviously, if any data falls below the consensus, it's viewed negatively. Anything above the consensus, obviously, that's going to be, a little bit more positive, but we'll talk more about the numbers soon. All right. So this is the NFP numbers. Right, it's basically just jobs added or lost. It's basically just a payroll number collected by the Bureau of Labor Statistics. Yesterday we've got the ADP NFP number. The ADP NFP number, it's data that's collected by ADP, which is a private company. So we don't really focus too much on the ADP NFP number. The NFP from the BLS, that's basically what we are focusing on. All right. Okay. So I think we are gonna skip to. I don't think we need to look at this one, but if you want to look at what currencies to look at, obviously anything that it's pretty active during the US session. Euro USD, dollar Japanese yen, dollar Swiss, Aussie USD, New Zealand USD, Aussie New Zealand. Probably not so much. Dollar Canadian, pound USD, obviously, that's going to trigger a lot of movement. The dollar Japanese yen, that's going to have a secondary impact on the euro yen, sterling yen, all the other yen crosses as well. So yeah, there's actually a lot of choices. You probably like to trade gold. I don't trade gold, but we'll take a look at gold as well, right? The other data that comes up with the NFP number is actually the US unemployment rate. And the way we look at the unemployment rate, it's kind of in reverse to what the NFP is. So for the data to be positive for the US market or the US economy, and which is not always a good thing, right? Having depending on the context of things, having a good data, it's probably not what the market wanted, especially for today. So we will discuss that a little bit later on. But the unemployment rate, it's the way we read it. We want to see a lower unemployment rate, which is good. That means the labor market is tight. If the NFP number goes up, the unemployment rate goes down. Those are positives. If the NFP number goes up, but the unemployment rate also goes up with it, it's kind of a mixed bag, right? If the NFP number goes down, unemployment rate goes up, obviously that's going to have a negative impact. So don't ignore the unemployment rate, because it plays a very important role as well in terms of how the NFP is going to move the market. So tonight's number, I don't really like calling it NFP night, but it's more of US employment numbers. I prefer that term a lot more, because we're not just looking at the NFP numbers, we're also looking at the US unemployment rate numbers, and then we also look at the US average hourly earnings, right? I'm going to pause this for a little bit. You guys can come back to it because I want to shake things up a little bit. I think we want to focus a little bit more on the practical side. So I want to show you a few things before we get started. So very, very quickly, right? There are a couple of trading strategies that you can employ. Number one is pre-NFP trading. So traders like me, I'm a swing trader. I already have a running position right now. And no matter what the NFP is, I already have my stop losses. Not really too concerned, because I protect my position during the NFP numbers, and then I'll make adjustments after the NFP numbers. But do I have an opinion on the whole thing? Yes, I already have an opinion on what to expect from the market, right? But if you want to do this, make sure you really know what you're doing. Make sure you're really good with your fundamentals and how you actually read the whole context, because this approach involves opening a position, in the days leading up to the NFP release. So we already set up our, some of us in the Telegram channel, some of the communities as well. We already set up our positions pretty much since 2 days ago. I think some on Monday as well. So we kind of already have a figure, NFP number for us that trades this is really much more of a noise. It's just basically going to boost it or fail the trade. Simple as that. That's the way we look at it. All right. So, there's going to be anticipation, which I'm going to bring it up later on. For example, all right, if I bring up the employment numbers, the NFP numbers, right? Forecast and consensus is 190,000 to 180,000, right? Previous number was 253,000. If the number comes in below 190,000, obviously that's going to be bad for the US, right? Why is it bad for the US though? There's going to be a reason. Why is it bad for the US? Could it be really bad for the US and stuff like that? Because it's kind of different. We've got the US debt ceiling crisis. That's already kind of half averted. We already have the House vote that came in. All right, takes away a lot of the safe haven asset run. That kind of pulls down the US dollar a little bit. And then there's going to be that talk about the FOMC going to skip the interest rate hike. It really depends on the numbers tonight. If it turns out that we have a number that's 190,000 on the NFP numbers tonight, let's say 230,000, possible, right? Because we've been getting good numbers from the employment side. Could it happen? Possible, right? There's always going to be that probability that it could happen. There could be a surprise to the upside. If that surprise to the upside happens, then obviously that's going to boost the US dollar. But then we have to look at the unemployment rate as well, because if with the unemployment rate, we're expecting the unemployment rate to go up from 3.4 to 3.5%, which is not good. If it comes in at 3.4%, then that's going to be a surprise to the market, and that's going to be good. All right, so we do have anticipations based on the consensus. Taking a look at the current situation, the US debt ceiling crisis, what the FOMC is going to do, that's going to, have an opinion on how we trade pre-NFP numbers. Okay, so that's one. Number two, which is what we're going to be setting up in the next 5 minutes, I believe. Hopefully I can get through that. It's going to be the Straddle strategy. This is something that we talked about last month, and when we start doing this. So basically, you basically have two pending orders, right? A buy stop and a sell stop above and below the current market price just before the NFP release. That way you can potentially profit from a strong price movement in either direction. And once one of the other is triggered, immediately cancel the other, or you have to cancel the other order to avoid being exposed to further market fluctuations. The reason being is, and you really need to be quick about this, because the market can actually snap both orders in an instant, right? So you got to be really quick on this one here. So this one here is a little bit risky, all right, because you need to know when to get out. That's number one. Risk number two is that that because a lot of people are going to be opening up positions during news releases. Sometimes your spread gets wider, right? Sometimes your order gets a little bit delayed in terms of when it's going to get filled, right? So there are going to be other factors that's going to affect that. Okay, so this one here is actually going to be a little bit risky, and the best way to tackle this is actually to just take whatever the market gives you, right? For example, if you trade and you start seeing $100, $10, if depending on your lot sizes, obviously. But if you see the numbers, you basically just have to be quick and you basically close that position. The reason for that is because there's going to be a potential fade on the initial move. And I already mentioned before that I've done more than 200, and I believe it's going to be my 254th NFP today, if I'm not mistaken. Give or take, but it is more than 250 NFP numbers. And from that 250 NFP numbers, I can tell you the probability is actually about 80% that the market is actually going to fade that initial move, right? So it will basically go in one direction, and then the market will turn around. Okay, so involves waiting for the NFP release, observing the initial market reaction. Once the initial volatility subsides, which is good, because then you have a much better entry. You can kind of do your stop losses and take profit levels a little bit more logically. You're not really rush into it. You could be looking for opportunity to trade against that initial move. And I'll give you examples from the past 2 months, 3 months actually, so you guys can make a decision on that we actually saw a fade pretty much every time, right? This approach is based on the idea that the market often overreacts to the NFP data. Sometimes people just look at the NFP data and then they just start realizing, oh no, you know what, the unemployment rate was kind of the opposite, which is not really good. They kind of let go of their positions, or there's that initial rush in the market, people getting their buy stops and sell stops getting triggered, and then they close their profits. It kind of reverses the market a little bit. So it's more of a liquidity thing rather than anything else. Okay. So the other one is obviously post NFP trading. Some people don't trade on Friday. Most of the time, I actually don't trade on Fridays. Today might be a little bit different. But yeah, we wait for the numbers to come out, and then we'll trade maybe on Monday. Okay, so regardless of the strategies you choose, keep the following things in mind. Obviously, manage your risk. Always use appropriate stop losses. Never use more than a small percentage of your trading capital. So you need to understand your risk capital, equity. You need to manage your risk management with your equity risk as well, not just the trade risks, right? So stay informed. Keep track of economic news, obviously, forecast, market sentiments leading up to the NFP release, which I already discussed a little bit about what's really going on. That's going to help out, obviously. We kind of know what we want. The market right now doesn't want a high NFP numbers because the market doesn't want the FOMC to start thinking, oh, you know what, the employment numbers is really good. We have more room to continue hiking interest rate. Right now, the whole plan and the whole anticipation from the market is that the NFP numbers might or could contribute to the decision that the FOMC is going to make in terms of whether or not they're going to skip that interest rate hike this month. Okay. Last one is obviously be flexible, right? Don't be so stubborn when you open a position. You realize something is wrong with that position. If you realize that you're wrong, you need to kind of close that and then just follow what the market is doing. Okay. The way I survived more than 250 NFP numbers is basically just don't go against the market. Simple as that. Okay. So I'm gonna give you one number. This is on the April number. So we have a break to the upside, and then we have that fade, right? So the initial NFP numbers, obviously, it was 236,000, higher than consensus, 228,000. Even though the previous number was 326,000, we still get a number that is still higher than the consensus, even though it's lower than the previous month, right? But this April number was a little bit unique because that 326,000 number was just surprisingly high for that particular month. But yeah, the candle you see that red line there, the breakout, that's basically during the NFP numbers. And then look what happens. It rushes up in one direction, it kind of pauses a little bit, it pulls back down within range before it actually continues to run up. Okay, then the next one, which is on April, if you take a look at this one here, again, it breaks to the downside. This is just an example on the pound USD, but you're basically going to see this replicated into pretty much all the other FX majors as well. So you have a breakout, and then market kind of revert back to the range as well. And last month was a little bit unique. All right, take a look at that box there. All right, that's the range that we were looking at pre-NFP. And then we have the NFP numbers. It breaks to the downside. It runs up, right? And within the first 15 minutes, what the market did was it reverses and it runs up, and it actually created a new high. It actually reverses the whole initial reaction to the market. So what I'm trying to tell you is that during the initial release of the NFP numbers, it's not necessarily the direction that the market is going to take for the whole day. Okay. In fact, if you are going to trade the straddle strategy, try to get out within the first 10 minutes if you can, because once that 15 minutes is up, so right now we are about 10 minutes to NFP. And when the NFP number get released at half past the hour, right? You have up until 45 or the first 50 minutes to kind of figure out what you want to do with that position, with that initial straddle breakout strategies, whatever, right? Whether you want to get in or whether you want to get out, make that decision very, very quickly, because once that 50 minutes is up, a lot of traders like me are probably going to be trading the fade, because we're going to be looking at key levels in the market. We are going to talk about the potential on those key levels as well once we have that initial 50 minutes running. Okay. All right. So yeah, I'm not telling you guys to buy or sell now right now because there's no point to that. I think we need to take a look at the charts as well. Okay, so I like what the market has been doing. The pound USD, for example, this one here, very, very good, right? We've been, it just started moving down a little bit, but it was actually kind of stuck in about 25 pips range on the pound USD. And this is really important with the pound USD. Let me just give you a little bit of an illustration on what I mean by that. If you take a look at a pound USD, swing traders are currently positioned for a long-term position on the pound USD. And what the anticipation for the NFP number is that we want to see the NFP number pushes the pound USD down. So what we want to see is actually this. We want to see the NFP number goes down, could be back towards the daily pivot and bounce back up. Right, because we've got 1.25 over there, which is a key psychological price level. And I think what the market is doing right now, it's respecting those levels, and we have a range on those, right? So I'm going to leave it until about 5 minutes before we make our final adjustment to have our buy stop or our sell stop. But right now, since price is closer to the lower range, we can already start putting in our buy stops if we want to. The buy stop for the pound USD is actually going to be, dependent on how you want to trade it, right? If you really want to trade it for the long run, then you really want to see that break above 1.2550. But if you just want to straddle the NFP numbers and you don't really care much about the long term, you just want to get in within 10 pips, you get out with whatever you have, then your buy stop order is likely going to be about 1.2542. So we can have that order over there. I'm not going to place my sell stop just yet, right? Because the buy stop is there's an option for a buy stop. And if you're using MT4 or MT5, just right click. That's going to be a tab that says trading, and just go to the level. Just right click on the level that you want, and you just select buy stop. So we're going to talk about buy stops and limits as well on the 12th. But buy stop is basically this: if price goes up, it's just going to trigger that buy. Simple as that. If it goes down, it will just trigger that sell stop. So if I have a sell stop down here, if the market goes down, it's going to trigger my sell stop for that trade. All right, Euro USD also been pretty kind on on us, at least, very least. This one here again within range. If you take a look at it, huge candles and whatnot, it's about 25 pips of range. I can already set my buy stop pretty much. I could have my buy stop pretty much at about 1.0779, 1.07, 80 if you want to. Just set it up there. We'll do the sell stop closer to the release of the NFP numbers. All right. Euro Japanese yen, can you do a buy stop and sell stop as well? Yes, you can do that because this one here is likely going to be about 149.75. So we are actually going to go 149.71. Okay. The sell stop, I think we're going to leave that a little bit because price is kind of somewhere in between. It might be a little bit too early to have our sell stop. All right. But if you want to, you can have that sell stop down here. Okay. So this is the straddle strategy. What we want to see is basically we simply want to see if price breaks out, if price touches that buy stop and run up to the upside, or is it going to go down and hit our sell stop, right? This one here is a little bit too early to have this sell stop, I'll be honest with you, but it is what it is. Yeah. So keep that in mind. That's for the Euro Yen. Dollar Japanese yen a little bit unique tonight. In terms of the resistance, we need to be a little bit more careful. There's going to be a resistance at 139, right? So if you want to have your sell stop and you want to get out, you can have a buy stop right now at about 139. In terms of sell stop, I think you can already place it below 138.75. That should be enough for the dollar Japanese yen. All right. Gold, obviously, that's going to be a lot of levels to think about. What you want for your buy stop and sell stop. Do you want the latest current range? If that's going to be the case, then you really want to have it at about 1981, 1977. But do not place that buy stop now. Okay, do it maybe about 2 minutes before the trade. It's only just a few clicks. It's going to take you seconds, but it's much better to do that just in case if price continues to go up and created a new range, we need to adjust our buy stop to whatever range it is before the NFP numbers get released. Okay, and you know there's going to be a few considerations as well. Like for example, I can talk about the pound USD because a majority of my portfolio is actually at pound USD. So I'm kind of the expert in pound USD, and this is the currency that I trade the most. Right, simple as that. What I want to see with the pound USD is actually, do I have any anticipation for the pound USD? I actually want to see pound USD go to 1.25, ideally. Right? If that's the case, then I'm able to add positions. Just as a disclaimer, I already have a running position for the pound USD at a very low level, very close to 1.24 and 1.2450. So I already have a running position on the pound USD, which is not intended for intraday trades. It is more for a swing trade. But anyway, really want to see a move back to 1.25. Let me just hide the sessions. The reason being is that we broke through 1.25 and we haven't retested 1.25. So I don't care what the NFP number is, right? Is it bad? Is it good? We'll think about it once we have the numbers. I don't really anticipate too much. So to me, the NFP numbers, as a swing trader, it's really more of a noise. As simple as that. It's either going to help me with my trade, or it's going to say, you know what, that's kind of the limit of your trade. I don't think you can hold that position for any longer. I already have my stop losses adjusted and everything, so I'm good to go no matter what happens tonight with the NFP numbers. I'm preset on everything. Okay, but yeah, I do anticipate a little bit of a break lower, maybe a surprise. I don't know, right? But I want to see that push towards 1.25, because if that happens, then I can add into my position and I can fade that initial reaction from the NFP numbers, right? So that's the kind of the whole goal for how to fade it. So do we have preferences on what to anticipate if there's going to be a fade and stuff like that? Yeah, there are key levels. We've got 1.25 upside. We've got 1.2550. Okay. All right, the NFP number is going to get released in pretty much any minute now. 3 more minutes to go. So again, the consensus, it's for a drop from 253,000 to 190,000. The unemployment rate is expected to go up from 3.4% to 3.5%. If the unemployment rate stays at 3.4 or even goes down to 3.3%, that's going to kick the US dollar really, really high, right? But if we get that 3.5%, 3.6%, that's going to smash the US dollar. We're probably going to be looking at the pound USD and the euro USD rallying up. The dollar yen is probably going to go down. The NFP numbers, 253,000, 190,000, anything lower than consensus, then yeah, we can do that. Okay. So I think it's time for us to place our sell stop. I think we are about 2 minutes into it. So I got sell stop for the pound USD here, euro USD just slightly there. You can have it at that line if you want to, but I'm just gonna have it a little bit lower for the sell stop. Okay, euro yen, already have that. Sterling yen. All right, we are going to do the sell stop over here. Dollar Japanese yen, we already got the sell stop and the buy stop. Everything is in order. For gold, I think we can go for this one here. And then when it gets to about 1975, there's going to be a support there for gold. You might want to set a potential take profit for that sell stop at about 1975. But we are going to be looking at this manually. We already have the orders placed in. Once it's kicked in, remember, one position opens, you need to cancel the other order. All right, so we've got pound USD, euro yen, sterling yen, dollar yen, gold. right? I don't trade gold, but just for the sake of an example here, we got gold. All right, number's gonna get released any moment now. Within the minutes, we should be looking at reactions in the market right now. There we go. Orders been triggered. So we've got Euro USD, right? Everything that's running. We need to kind of close the other one. So we got Euro USD. I'm going to close Euro USD. I'm going to close the Pound USD. I'm going to close gold. Yeah, okay, fine. What else got open? Dollar Japanese yen. So I'm going to close that. So yeah. Just wait. Orders get filled pretty quickly. Something just opened again. Euro yen got open. So this is the risk of the initial run, right? We don't know. We got the spikes going on. You know, once we got one order done, we kind of have to close the other one. But we'll see. And we have to be really quick on this one here. I think the only order left, it's the sterling yen. I don't have a buy stop order for sterling yen, but anyway, so let's ignore sterling yen. So we got a few running. And I don't care about what the chart says anymore. I'm just looking at whatever the amount is running. That the number is just like, right? So if it's too much of a loss and you don't like it, close it. Simple as that. It's never going to be a guarantee that, oh yeah, you know, that you hit your stop losses. Or sorry, you hit your sell stop or your buy stop and everything is going to be in order. It's not going to be the case, right? What we're looking at is I'm on a standard lot. So we're really dealing with only about -7 pips at this point in time. So we'll wait. You know, and we need to be quick on this one here. It's only the first minute, right? So we'll wait. There's a lot of volatility going on right now. Spread is actually not pretty bad. If we take a look at the spread here, it's actually pretty good, right? For the Pound USD to actually be in about 2, it's actually not too bad. All right, what is the NFP numbers? The unemployment rate was 3.7%, which is way bad, right? The NFP numbers, though, it is surprisingly at 339,000. So this is actually a mixed data. Unemployment rate pretty high, 3.7%. Not too kind on the market there. It's a 0.2% push to the upside. I think that could weigh a lot more than the monthly NFP numbers at 339,000. Really a surprising number. It was way higher than last month. It was much better than consensus. So this is why we're looking at the dollar Japanese yen likely going to be going up right now. Gold and everything else got pushed down because the concern right now would be that the FOMC could be hiking interest rate. Now remember, I want the Pound USD to go to 1.25. So I already have that predetermined. So we are looking at 1.25. So Pound USD is going to be something I'm going to be focusing on because I already have a plan going through for the Pound USD. I want to see, you know, once we see the next candle or the next 2 candles, if we get something positive for the Pound USD, I'm actually going to close the sell on the Pound USD and I'm going to reverse on the Pound USD. But again, the number that just came out, it is a little bit of a mixed bag, right? The US average hourly earnings month on month, it is, as per consensus, drops down from 0.4% to 0.3%. The year-on-year average hourly earnings also dropped down as well from 4.4 to 4.3%, which is below consensus. So I think the number is a little bit of a mixed bag, right? I think people are just going to be thinking, right, okay, which one is you know, carries a lot more weight? Is it the NFP numbers or is it going to be the unemployment rate numbers? But yeah, not too kind in our favor. And I don't like mixed data like this because it kind of gave a very distinct view on the market. The unemployment rate went up 0.2%, 0.3% actually. The NFP numbers was again a surprise to the upside. I don't think we have a revision on the previous number. It is at 294,000. All right. Okay, so that's pretty much it. This is the straddle strategy. All right. In terms of stop losses, do you want to put stop losses on this one here? If you do, for example, on this one here, we got a sell here. You can have your stop losses over there, right? Just at the upper end of the range, but I don't really recommend that because typically having stop losses like that is it's basically just looking for trouble, but it is better than not having any stop losses. So we are gonna have our stop losses now, just in case things goes bad, right? It's already pretty far up there, but nevertheless, you still need your stop losses, right? Euro yen triggered a buy, so we want to have our stop losses a little bit lower than the Asian range. In fact, the sterling yen didn't go on this one because I didn't place a buy stop on this one. The dollar Japanese yen, this one here, it is unique, right? Remember what I said? That was that resistance at 139. I think a lot of people are actually going to be there shorting the dollar Japanese yen, because if I were to give you the much bigger picture on the dollar Japanese yen, there are higher probability that there's that resistance at 139, and for the dollar Japanese yen, I think we might actually see a potential rejection happening on the dollar Japanese yen. So again, I much prefer to trade on the fade rather than the initial release, but it is what it is, right? Gold, for this one here, we got a sell here. You can have a few stop loss. You probably don't want to have too big of a stop loss for gold, but it should be there. For the dollar Japanese yen, your stop loss really should be just slightly below. No, should be about here, about 138.60. So we already got our stop losses. We are just thinking about our take profit right now. What is going to be our take profit numbers? Obviously, with the initial release, you can look at the previous swings over here. For example, if you want to go for your take profit, so maybe you can go for something about closer to 140. But it is unrealistic because we are looking at 139 here. So again, this is on the hourly time frame. So again, it is not a realistic number to go for. But you can go for maybe 2, 3, 20, 30 pips out of your entry. Not really expecting too much on this one here. See if there's actually going to be a swing. Yeah, just right around there for the dollar Japanese yen. Pound USD, we don't actually have a lot going for pound USD, because if we were to set a take profit level on the pound USD, it is likely going to be below 1.25. And the problem with this is that I think this one here is a tough call, right? Because as I said earlier, we anticipate that move towards 1.25 because we want to see buyers coming in at 1.25, fill in a lot of their positions, but that's pretty much it. But if you already have that straddle strategy running, obviously you kind of need to have an exit plan as well. How much you want to go for your profit, obviously. But I don't like the straddle strategy. I like the fade. I prefer the fade a lot more, okay? So we'll see what happens. We don't see a lot of reaction right now in the market, right? Euro yen, we already have our stop losses. I think for target level, this one here is going to be a little bit tough because we actually can't aim for too much. There's actually going to be a resistance just about 12 pips from your entry, so that's not a lot of move here. Okay. All right. What else? Sterling yen, we didn't get sterling yen. Dollar yen, obviously there it's flat. All right, so this is a risk that you are going to run into with the straddle strategy. It just doesn't give you enough time to think about what to do. So we've got a few minutes, all right? Let's plan ahead. How do we fade this right now? Okay, how do we actually want to fade what we just saw on the market there? Okay, so we have that break below the range. It picked up what I want from 1.25. So there's actually a higher probability for the pound USD to potentially reverses on itself once it breaks above 1.2540. Okay, so position traders might want to go in, or probably got in a position at 1.25, but we obviously didn't get that. We are nowhere near 1.25. So the fade that happens, it basically didn't happen in the 5-minute chart even. So you don't actually have a lot of reaction. It was just like a snap. And that's pretty much it. Market back in range. Nothing much to do here. Okay, but the mixed data. Let's talk about the mixed data that we have on the numbers here. 3.7% is a very surprising unemployment rate. It's honestly, it is pretty high. 3.6%, I can take 3.6%. I think the market can take 3.6%. But 3.7% right now, the consideration for that, in comparison to the monthly NFP number gains, right? Which I need to go through with the NFP numbers, the breakdown itself. With the unemployment rate, that's actually going to be a breakdown within that unemployment rate. I need to come through that as well. But just looking at the numbers, which one matters more? Is it the unemployment rate or is it the NFP numbers? I think the unemployment rate probably is going to factor in a little bit more right now at this point in time. Just looking at the market reaction right now, we have that initial drop to the downside just because market thinks, oh, the NFP number was good. And then everyone starts realizing, oh, the unemployment rate wasn't good. It was 3.7%. It could actually weigh a lot on the US dollar itself. So, I'm fine either way because I already have a long position on the pound USD. I think the way we look at the pound USD, if it breaks the other side, then I much prefer to we might actually see a potential reversal on the pound USD, a continuation for the pound USD. But yeah, but here's the fun side. You're looking at what I have right now, and you're thinking, Jesus, this guy is he's on negative 1,300. Break it down. This is a standard lot, right? So every 10 pips is $10. So it's actually not a lot of pips in there. It's only negative 13 pips, which is not huge, right? And this is the beauty of the straddle strategy. If you think the risk is actually huge, it's actually not, because it kind of gets spreads out a lot on a lot of trades. So some trades could be doing great, some trades could be doing bad, But anyway, obviously we don't have any preference on that one. All right, for gold, we don't have a target level as of yet for gold. So are we going to get that reversal? Are we going to get a fade? Probably not. I don't know. But yeah, we need to set our target levels for gold. How about 1-to-1 risk reward ratio, 1981, 1974, so about 1969, 1970, about there? No, it's actually not, obviously. We got in at about 1972, so about 10. So 1972, but 1965, I'll say. Can't really go too much on this one here because we need to consider what was, kind of the previous support and resistance in the market as well, the key levels in the market. That's something to consider as well. All right. So we got in on the buy stop, we got in on the sell stop. Everything is settling down. Everything is starting to calm down a little bit. All right. This is okay. We're still far away from our entry point, but yeah, it's calmed down a little bit. Okay, we probably have time to figure out what the market wants to do at this point in time, in terms of what the numbers are, because I'm doing the webinar right here, right now, so I can actually go in and break down the components of the unemployment numbers as well as the NFP numbers. Okay. Euro USD for 5 to 15 minutes. I don't do 15 minutes in all honesty. Euro USD on the 15 minutes, at the very least, I can give you a little bit of a look into the Euro USD on the 15 minutes. The Euro USD, in terms of whether or not there's actually going to be demand in the market, where there's actually going to be people looking to buy into the Euro USD, consider the positioning on the Euro USD first, okay? The Euro USD, if we take a look at this one here, obviously we are pretty cool. You know why? Because we actually have 1.0750. That's kind of the level that supports are likely going to come in. That's the level we want to be looking out for, because that was the previous support turn resistance for Euro USD. So this is important. If we lose that, then we are actually going to travel a little bit lower. Below 1.0750, obviously we got 1.0725, and then up to 1.07. Okay, so there could be a few levels where the market could come in and buy into the trade, but yeah, there's going to be a few levels to think about. For the Euro USD, I think we got a sell on the Euro USD, but to fade this one, I think you need to wait about 1.0725 or about 1.07. Okay. All right, so first 15 minutes is up. Let's take a look at the momentum in the market. Are we still going strong in that momentum? We are only going to close our position if there's actually going to be a kind of a bullish kind of reversal sort of candles, and I need that to be kind of significant. Like for the pound USD, you know, are we going to see people getting in again at 1.25? So the first initial rush just now, unless you already have a buy stop at 1.25, you're probably not gonna get filled on that one there. But yeah, we'll see. 1.25 still on track. Euro USD still on track. Euro yen pretty flat. Dollar Japanese yen on track. Gold pretty significant bearish movement on gold there. So yeah, we'll see. But that's pretty much it, guys. That's how you trade the NFP during release. Is it the best option? That's going to be the question. Is it going to be for you? You know, some people like it. I'll be honest with you. Some people like it. Some people find it very, very exciting. Right? People actually look forward to the NFP numbers every month because yeah, it's quick. It's where you see the market moves very, very quickly. But there's a lot of risk involved as well. Are there any other methods out there that I prefer? Statistically, I prefer the fade, all right? Because going through 200 plus NFP numbers, I just see the fade to be a little bit more less nerve wracking than the straddle strategy. Okay, but the straddle strategy could work. It's just that we have a mixed number tonight. You know, if it was both positive for the US, if the unemployment rate was, you know, kind of at per consensus at 3.5%, or, you know, max 3.6%, I guess that's going to boost the US dollar a little bit. But we just don't see that. 3.7% is it's a really surprising number. It's a really weak number to look at. I did a straddle strategy, 100 lot size for a $10 current price went towards my sell stop direction, but the position was cancelled with no profit. Please, what is the cost? How are you going to have a 100 lot size on a $10 account? You're not going to have enough margin to do that. The overall trade on the Euro USD, we'll take a look at that later on. Just a minute. Your time entertainment, I think something is wrong here. You need to get accustomed to understanding how you want to open your lot sizes. You can't open 100 lot sizes with $10 in your account. That's kind of impossible. I don't think you can actually open a more than 1 or 2 micro lots with $10 as well. All right, let me go through the questions. A lot of chatters. Why don't you trade gold? I just don't. I don't like gold as an asset, just from personal experience going through gold in 2008 and 2018. So yeah, I just don't like that. But that's my, personal strategy. Straddle strategy is kind of like a gambling, as the chart may spike both directions, thus triggering both pending orders. So not advisable to trade like that. That's why we need to cancel the other order as quickly as possible. But yeah, I get your point, Hans. I don't like the straddle strategy. In all honesty, I don't like it. But it is what it is, right? People keep asking me, hey, how do you actually trade the NFP numbers? If you don't understand what the context of the NFP numbers, then it's kind of nigh impossible for you to actually trade the fade. Okay? So at the very least, you need to have some sort of understanding. If you don't have any understanding of fundamentals or the context of things, and that's why we're doing this session, so we can give you that context every month, right? The straddle, it's pretty much the strategy to get in and out during the NFP news releases. Again, as I state, there are risks involved. You might not like it, right? So you got to think about what's going on with the straddle strategy. As Hans said, it can trigger both. If you're not quick enough in terms of closing your pending orders for the other side, it can clip up and down both sides and then goes in one direction. What? No. Why do I want to go at gold? I don't know if in terms of gold, in all honesty, all I see with gold, it's really more for range bound market condition. Okay. What if we have a short on the pound around 1.254? Okay. Let me switch very quickly. I'm monitoring it on another chart as well, so don't worry about it. We'll come back to that. So let's talk about the Euro USD and the Pound USD a little bit, okay? So I think a lot of people have that Euro position, the Pound USD position. For the Pound position, if you have that short at 1.2540, what you should be doing is that you really should have your stop loss at your break-even point. So if you have that short there, you really want to have your stop loss there. Your target level, it's pretty limited, right? In fact, you're probably going to be looking at about 1.2490 as your potential target level. I think that's good enough. In fact, right now, it's already running. Don't forget there might be a potential fade on the Pound USD. So logically speaking, you could actually lock your profit to 1.2525. At least you're locking in 15-20 pips on the Pound USD. It should be okay. Okay, that's for the Pound USD if you have a short position around 1.254. Okay, next up, that's a question on Euro USD. On the 4-hourly chart, what are the current conditions on the 4-hourly chart? The 4-hourly chart, if we take a look at the whole daily pivot, right? We are pivoting. The daily pivot is at 1.0730. So there's going to be a little bit of resistance building up at about 1.0775 all the way up to 1.08. Is this something that I really want to hold for the long run for the Euro USD? It's not Pound USD. Okay, this is below the Ichimoku cloud. Any pullback to the upside is going to be limited at 1.08, 1.0825, 1.0850. The Pound USD is a different case. The Pound USD maintains a strong uptrend. Okay, so the position between Euro USD and the Pound USD is a little bit unique. I'm happy going long the Pound USD. I'm not too happy going long the Euro USD. All right, so straddle strategy. I think we are about $400. You know, really depends. You guys want to get out? You can get out right now. It's going in the direction. If you want to wait for your stop loss, your take profit level to happen, you can start adjusting your stop loss, like the Pound USD right now, because we already have a little bit of a higher range over there. We can move that stop loss over there. We really want to keep it tight with straddle strategies, right? Euro USD, you really want to start moving your stop losses a little bit down, just to minimize it. The dollar, Euro yen, you can move it up a little bit. The dollar Japanese yen, you can move it up a little bit as well, just a little bit, not too much. Gold, you can actually lock it to break even if you want to. Right, if you want to have it, give it a little bit more room. I would have it at about 1975. I'm happy with about 1975, but really don't want to have too big of a stop loss on gold. Right, if you want to move it to break even, I think you have enough room for you to actually move your stop loss to break even for gold. Okay, but everything else, that's pretty much it. I don't think we're actually going to be looking at a potential fade within the next 7 minutes. I doubt it. Right, I think we're just here for the straddle because the number was surprising, so it kind of give the market a little bit of a thought there. In terms of the potential for the dollar strengthening, it's really more on the cost with the FOMC potentially still hiking interest rate again, and that's going to be a risk aversion in the market, a run towards safe haven. That's going to push the US dollar up. Okay. All right, so because we're at the end of the session, very close to the end of the session, just for the sake of this example, I'm just going to close everything right now. And I'm happy with how we are doing today. No it's actually pretty good. It's small. But yeah, it's pretty good. Okay. All right. So any questions so far with straddle strategy? I'm already out for the straddle thing. This one here should be pretty good on this one. I think I got in a little bit late on the pound USD. Now the pound USD, I want to fade the pound USD. So in fact, for the pound USD, I would like to go long pound USD, just for the pound USD, because I have certain plans for the pound USD. But yeah, this gives me another opportunity. In terms of stop losses for the pound USD, if you want to fade this, obviously you want to wait for a little bit. So your initial stop loss, if you don't want to risk too much, really want to put it at around key psychological price level at about 1.2475. I want to give it a little bit more room because I want to go for something a little bit different for the pound USD here. How much of a difference? If you're thinking, really looking at a potential for the pound USD to go back to 1.2550. So I don't need this range anymore for the pound USD. I just need this too. I see people picking it up at 1.25. This one here, happy to go for a fade. The Euro USD, do we have any significant key levels to watch out for? We've got 1.0750. I don't think we can fade this one as of yet. I think for the fade, we basically need to close back up above 1.0750. Then that's where you might be able to go in. Now with the fade, you cannot do a buy stop order because you need to have a candlestick to close a certain condition. One position didn't get closed. It was the pound USD didn't get closed. Oh, sorry, I actually just went long pound USD. So let me go long again pound USD. But yeah, sorry. So pound USD, I want to go 1.2550. And stop loss, I want to have it a little bit lower, 1.2475. Still going to give me a good risk reward ratio on the pound USD. Pretty happy, right? Because this is in line with what I already have. So again, might not be for everyone, but I'm just giving you an example of a potential fade. We already see that initial movement in the market. I think there's a key level at 1.25. From the reaction around 1.25, I like to fade the pound USD. I've got target at 1.2550. How can I know the appropriate lot size for a given dollar account? Which app can I make use of? You can actually go to OctaFX.com website, and you can actually do your lot calculation as well from how much equity you have. Dio, yeah. Look, it's not for everyone. I don't like it. Right, from my experience, because I'm more of a swing trader anyway, so I'll wait for the news to happen, or I already have a position before the news, anticipating what's likely going to happen. Again, as I said, with the NFP numbers, it's just so fuzzy, right? It might not be for everyone, I'll be honest with you, but I do know that there are actually several traders that actually like the adrenaline during the NFP numbers, gets them excited. I'll probably pass that because I've already seen it too many times. But yeah. I'm new to trading. What is break even and how can I hold a position so that I don't lose money? So you move your stop loss to break even. That means if anything happens, like for gold, let me just give you an example from the pound USD. So I was saying just now, because there was a question just now, if someone had a short position at 1.2540, right, versus target, I would say 1.2490. Initial stop loss would probably be there. What I mean by break even is your stop loss is at your entry point. So right now, if the market goes against you, because you have a short position, you have a sell in the pound USD, right? If the market goes back up, it hits your stop loss, but your stop loss is at your entry level. Therefore, it's what we call a break even. Okay? Cool. Right on time. And I don't think we actually performed too badly on this one here. Just waiting on a few fades. I'm happy to fade the pound USD. I got my target. I got my stop loss 1.2475, targeting 1.2550. Potentially even more if I see the momentum building up on this one here. Obviously, you are going to need some momentum indicators. You could use the RSI. You could use the stochastics. Stochastics is all right. I need the RSI to go up a little bit higher. But yeah, once price get to about 1.2540, then make a decision, because this is something that can actually be transformed into more of a swing trade. The take profit level can actually be adjusted to about 1.26 on the pound USD. But just for today to trade the fade, I'm happy to have my take profit target at 1.2550. Okay. Cool. On time. Wow. So that's NFP trading. Do I like NFP trading? I prefer CPI. I like CPI a lot more, and with the whole inflation issues going on in the world right now in terms of global inflation, I think CPI plays a much important role, much more so than the employment numbers from the US. So fortunately, we're going to be doing a live CPI on the 13th of June, which is on Tuesday. And on the 14th of June, the FOMC is going to make a decision whether or not they're going to be pausing interest rate hikes or they're going to hike interest rate hikes. So the CPI number for this month is actually going to be super, super important. Okay, so the next session that we have is going to be on the 12th. We'll talk more about the limit orders, buy orders, sell orders. We'll talk more about how you actually look at news trading. Again, news trading, there are a few things to consider. News trading is not fundamental trading. They're completely two different things, right? News trading is just trading the news releases, and that's something we want to discuss on the 12th. On the 13th, we are going to be doing a session very similar to this one, but more focused on that CPI release. And I think in terms of the CPI release, I think it's going to be much, much more bombastic than what the NFP is today. What the effect would this release data have on the US stock market open today? In all honesty, at this point in time, it's a little bit unclear. Just because in terms of the numbers, it was a little bit mixed. So again, if you guys missed out on the numbers, maybe care a little bit about the numbers. It was from 3.4%, expected to go up to 3.5% for unemployment rate. Number printed at 3.7%. This is way too high of an unemployment rate number. There's no previous revision. The NFE numbers comes in at 339,000, which is higher than last month, 394,000. Very similar to the April number. Way above the consensus of 190,000. Okay, we actually did talk about this in the Outlook on Monday. So if you guys didn't watch the Outlook on Monday, watch the Outlook on Monday. I say there is a potential for a higher than expected consensus number on the NFP, because we tally up the weekly unemployment claims and stuff like that. It just doesn't add up. It wasn't supposed to be lower than 200,000. So maybe some people anticipated that, but the concern right now is with the NFP numbers and the unemployment rate. That's a huge difference in terms of one is on this side, the other one's on the other side. So it's kind of a little bit of a mixed bag on the data. All right. Okay. So just to end today, basically we got a fade running. So right now we're buying that fade. If you take a look at a Euro USD, it's also doing a fade right now. It's basically going against your initial move. So I say, with the straddle, you need to get in, you need to get out quickly, and you need to make that decision really quickly on the fly. All right. Otherwise, everything is just going to fade itself. Everything is just going to reverse and crush on itself. The dollar Japanese yen. This one here, if you want to fade the dollar Japanese yen, you can actually do so once price move back below 139.40. Sorry, 139. So if the dollar Japanese yen move back below 139, you might want to trade a sell stop on the dollar Japanese yen if it goes below 139. Okay, I think we could potentially see that happen. You can do so right now if you want to short right now. I'm just giving you a few examples, but if you short right now, your stop loss is going to be about 139.43, right? What makes sense is about 139.50. I think that makes a lot more sense. Target level, obviously, you want to be looking at the lower range. I think we are good with about 138.50. So if we fade this, it gives us time to think about, okay, where's my stop loss? Where should I get in? Where should I get out? What should I do? It gives you a lot of that option. So, gives you a lot more thought. Gold, I won't touch gold. So I've got zero opinion on gold on this one. Sterling yen and euro yen, I would probably avoid sterling yen and euro yen, especially with the sterling yen. Because sterling yen, we are looking at around 174-ish as kind of the barrier for the sterling yen. I know we kind of anticipate a little bit more of a higher pound USD, so sterling yen should be lifted. But if the dollar Japanese yen crashes a lot faster than how the pound USD goes up, it might actually drag the sterling yen. So be a little bit more careful with this one here. Okay. Euro USD, if you guys want to if you guys want to fade this one, you can do so if you want to. If it closes above 1.0750, I think you can actually go long Euro USD if you want, targeting about 1.0775. But your stop loss is going to be about way there. So risk reward ratio probably doesn't quite click. I'm happy with the pound USD. I'm happy with the dollar Japanese yen at this point in time. But I have a lot more confidence on the pound USD. Because I know this currency inside out. This is, as I said, 60% of my portfolio is actually in pound USD. So this is something that we have been positioning ourselves for a long position on the pound USD throughout the week, basically. But yeah, it's more of a swing trade. I'm happy to take the fade. I got price going to 1.25, which is something if you want to review what we just said before the NFE numbers, I said I want pound USD to go down 1.25 because that's where people are going to buy in on pound USD. So yeah, this is the fade right now. If you want to close the fade right now, you can close it. It's actually doing a lot better than the initial Straddle strategy, and I don't have a lot of stress. I know what I'm looking at. I know what my risks are. I know what my take profit levels are. I have time to think about what's going to happen. Okay, so I like the fade a lot more. All right, cool. Okay, I'm going to wrap up the session for tonight. Again, thanks for joining in. Don't forget that we have the 12th and then the CPI on the 13th. Probably going to be looking at pretty much about the same session. We're going to live trade the CPI as well. Okay? Thank you all. Have a great evening. Have a great weekend. Stay safe. I'll see you in the Outlook next week on Monday.